Hey, we've got the investment pros here to help. And my man is back, Ed Butowski, managing partner at Chatwood Capital Investment Management and a Dallas native. We'll talk to you about this. Jim Frischling, NewOak Capital president.
You have computer trading. When you hit the 1880 mark, you had them kicking, and that's why you had a big
Jim,
sell-off.
are the computers extra sensitive to global to that kind of news? Because I think it's just a little bit more than a coincidence. I think emotions push it one way, and then the computers start to trip each other
I do
up.
think the market have been trading on fears of Ebola, ISIS, and geopolitical risk. And I like your points. I go Friday and now heading into this week, I'll call those red herrings. I'll call them noise. And that is not what drove trading. To me, it's now about U.S. growth versus challenges in Europe and to a lesser extent China. And we're going to see how this plays out, but I'm bullish on U.S. growth. You cannot underestimate that the unemployment rate during the crisis hit over 10%. Housing collapsed. The equity markets dropped 50%. And we had a few collapses like Bear Stearns, Lehman, and Madoff, which broke trust. So I don't agree with it. But the fear factor and the mistrust is incredibly high. And this is the most unloved rally I've seen in a long time.
I agree with that. People hate. There's no doubt we're saving over $200 million a day in gasoline. There's some refinancing going on. More people are working. But, Jim, it just doesn't feel like necessarily enough. What I'm wondering is, with all these higher expectations for GDP growth in the second half of the year, will corporations make up the slack? Are they going to kick in?
I'm actually going to depend a little bit more on the consumer who is strained because of the things you just talked about. Unemployment being at a 6-year low, housing market making a comeback, a high stock market, and again, incomes improving, unemployment. So I'm actually more bullish on consumer. Walmart cut its CapEx, cut its capital spending by over 10%. And they're trying to, for example, redevelop more e-commerce, less store sales. Right. So the fact is, I'm more worried about the corporations kicking into growth unless we have a tax.
All right, real quick, Ed.
This holiday season, no government shutdown, barring any shocks. Hopefully not as a harsh winter, and a longer period of shopping between Thanksgiving and Christmas. So expect a surprise to the upside.
All right, guys. That brings us.
Well, why is he in office?
When I look at hoarding of cash, whether it's by the wealthy or by corporations, I believe that's almost a referendum on expectations of taxation that's going to try to again, income inequality, and that's a little scary to me.
Why? To your point, Twitter is down about 10% in the aftermarket. I own it, and I'm not even breaking out in the sweat on that because it's what we call high beta. It's much more volatile than the overall market, Jim.
I was only going to add, I like your definitions very much, and I think it's important that when somebody sees that type of pullback that you're talking about, if they're looking to get in the market and they've missed it, and they think they're going to get in at a 30% downswing or 40 or 50, the fact is a recession is a 20%, okay? By your definition, I'm sorry, the correction, about 10. Right. So a pullback of that type of magnitude becomes a great entry point if your thesis is that is something that was done for erroneous reasons.
That's a Scotty crowd. They've got ice water in their veins, and they're going to pick the next bottom. I'm glad you said that. Another bum will show up, because we did the Q&A section from the speech, and someone said, well, you know, it's easy to say that, but everyone who comes in is a bum. I honestly believe that people come in with the best intentions. Anyone ever see that movie Bananas? It's an old Woody Allen movie. Mm-hmm, sure. All right, and the dictator has all the great intentions, but when he got all that power, he made people wear the underwear over their clothes. Yeah. I mean, it's just one of those things, Jim, where if they stay too long, I think that's when they turn.
Well, we are talking about motivations, objectives, and then again, due diligence, monitoring, measuring, and accountability. But to Matt's point, if their constituents are benefiting from their decisions, they're going to actually continue this.
Even when they don't benefit, who benefited from the bridge to nowhere?
But they're also getting checks. They're getting checks all the time. Right.
But if I can't get in this mix, I can't sell it.
That was my takeaway from your point. Put these contracts out to broader bid. Reduce the hurdles that prevent a small business from actually competing for these types of contracts. And I think you'll find there'll still be markups, but they won't be as bad as the ones you just pointed.
The bid is so narrow. I mean, I totally agree with you. I mean, they have to widen this out, and the umbrella needs to be a lot wider to be
more woman stood up. And
I was going to say, I think water is wet, and that's not an argument. And I thought...
Hold on. Ed made...
and I thought it was understood that small businesses are the single greatest job creators in this country. So
you own a small business. Are you offended when you hear that?
I was actually shocked by it, and I recognize that maybe she, on her backtrack, maybe she's not talking about us, but with our own money, you know. And again, I appreciate the legal framework. I appreciate everything in this country, and certainly my parents have done for me. But we put our capital at risk. We've hired over 100 people, and we're trying to grow a business. So I was a little offended by those comments.
Another hot restaurant stock had a great earnings report after the bell, and that stock is up too. Go ahead, Jim.
Yeah, I think the only thing that hurt Chipotle was their conservative guidance. And they shouldn't have been punished for that, because the fact is they have outstanding execution. Their brand is growing. You said it. They hit the cover off the ball. And if you don't think Chipotle is going to do well, you're basically shorting, or you're adverse to hospitality industry and specifically fast food, because they are one of the best run restaurant companies in the United States.
All right, Jim. What's the most important news coming up this week?
Oh, it's earnings. Look, 71% of the S&P 500 beat third quarter earnings long term. That's a 63% beats. So I think earnings are going to continue to drive.
It seems to me, though, that Wall Street is being very tough on guidance. It's extraordinarily nitpicky this time around.
I mean, look, I think given we're at historical highs, I understand the conservatism around this, but it's an overreaction. And given the low rate environment, we're still in a risk-on moment, and therefore I think you're going to have to put more money in the stock market. You're not going to get it from CDs, money markets, and the vast variety.
We did not have that in the Payne Investment 101. Essentially, risk on means buy stocks.
Sorry.